Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. I got Peter Zook from my office, filling in for Harry Glantz. How's that, Pete?
I'm doing great. How you doing?
Don't have your shoes to fill, Pete. You going to be okay?
I'm going to be fine.
I think Harry's at size 12 or something, but, but you definitely have tons of mortgage knowledge, Pete. Your mortgage license is as old as anybody's out there.
Oh, yeah. 5 digits. That's it.
Five digits means that you've been around a very long time. Hey, Pete, it's awesome. You brought in eXp Realty, Mark Henderson and his wife, Patty. You guys are the dynamic duo of Downriver. How's it going?
Doing great.
Oh, welcome to the show, guys. It's nice to have you. Patty, don't be nervous at all. Mark's going to carry you anyways. Patty, you and I just talk about like restaurants downriver and stuff. That'll be just fine.
Oh, that sounds good.
Okay. But always a 1 hour worth of the Hardcore Mortgage Show brought to you by Capital Mortgage Funding. You can call Capital all weekend long at 1-800-LOW-RATE, the best mortgage banker. Of course, after our show, we'll be filling you up with sports all day long here on 97.1. But first, we got to get your financial house in order so that you can have that great Super Bowl party at your house, Pete. You know, it's nice if you can have a house and friends and family over. That's always fun to do.
Absolutely. That's the goal. That's what we're here for.
The Federal Housing Finance Agency, that's sort of different. These letters are the FHFA. You know that one. I never can figure that one out. They decided to raise the conforming loan limit. That was a pretty cool deal this week.
Oh, yeah, that's something to look forward to. Where are we up to now?
It's a $484,350. But, Pete, as we were looking at our rates last week, our jumbo rates, so if you want to borrow more than $484,000, they're as good as our conforming rates.
Yeah, not bad.
They might even be better in certain situations. It leads me to actually like deeper conversations because, Mark, as you know, there's so many different twists and turns on any transaction, whether it just be an FHA purchase that we could be doing down in Wyandotte, or a big conventional, maybe $1 million house on Grosse Ile or something like that.
Right.
It could go as smooth as silk, or it could be some twists and turns. It could be anything. It could be an inspection. What's going on lately and what you find out there in the marketplace? Any twists or turns or anything exciting out there that's going on right now as we lead into the winter months?
Well, seeing with the way the industry has slowed down a little bit, we still have plenty of houses out in the market. More and more are showing up. But what's nice with our clients is that the buyer, being a buyer's agent, there's no competition. There's you can get in there, you can get a house, put in a proposal, and 9 times out of 10, I mean, you may have to negotiate a little bit, but you got no competition. Right now is the best time to be a buyer's agent.
Yeah, it's an interesting twist that we got a quick shift in the marketplace. I've been reading the Gary Keller book that he put out back in 2007, 2008 about the shift in the marketplace and that these are ups and downs and how long these things last and stuff. But definitely, it seemed like a very fast shift this year, Pete, as the mortgage rates started really burping up past May, June, July. We got to August and September. Right. And we did go from, in 2008, earlier this year, we were at 4% to start the year. And now hovering around 5%, although we saw a little bit of break this past week as the bond market's done pretty well.
Well, yeah, but you got to understand, rates are still great. I got into this business back in 92 when rates had dropped down to an unheard of low of 9.5%, and it only cost you 2 points, and people were falling all over themselves for that. They were just in love with it. So these people that have gotten used to, high 3s, low 4s, it's not real. It's artificial. Okay, even 5s are great rates.
And, of course, you get to write the interest off a mortgage. So if you're paying a higher rate, you get a bigger write-off. On the other hand, you got to be able to afford that payment at the end of the day. We take all your calls here, 248-539-9797. A little bit about refinancing. Of course, Freddie Mac reported that 81% of all refinances they did in the third quarter were actually cash-out transactions. So we're starting to see a little bit of a bump that way. And, of course, you guys, the Henderson team here, you guys know that any of the families that you put into homes, literally, if you go back 3 years ago, even 2 years ago, boy, they're sitting on a ton of equity. And if they're not, maybe we didn't get them the right house.
Yeah, they are. They're actually, a couple of the houses that we ended up selling, we actually found out that when the appraisals and everything came in, they were walking in with $10,000, $15,000 equity right off the bat.
Right, you sell that so often. Some of the families, though, did we had to pay a little bit more for that house. And in those cash buyers they were everywhere. So you were in those 130 to 150 houses, you were up against a lot of investors and landlords that wanted to buy up all these properties and stuff. So at the end of the day, some families did maybe overpay a little bit. But again, the appreciation and the lack of inventory out there sort of helped them get through that mess.
Yes, it did.
248-539-9797. We are always going to talk about what's going on here. Of course, 2007 and 8, it seems like a long time ago, but there's some interesting things going out there that now that we got to sort of keep an eye on and make sure the economy doesn't swag the other way. Of course, we got some bad news here locally. Of course, we're all automotive people here, and GM made that announcement earlier the week that they're going to shut down some of these plants and stuff. So a little bit of a scare because we got suppliers that feed into the big auto plants.
It affects everybody. I mean, it affects everybody from top on down. When you lose that number of jobs, everybody's going to feel it.
Yeah, especially the suppliers, and it might trickles down to the restaurant guy, all the businesses that are up along and real close to the proximity of any of these plants and stuff.
But we're no stranger to that here in Michigan.
Yeah, we'll get through it. And again, as we're making a move, again, the autonomous vehicles and other things, we don't know where it's all going to go. But I don't know how it's all going to work either until everyone has like a robot driving their car. How's a robot going to know when the road's icy or something? I have no idea, but we'll learn about that in the future, I guess. All right, we're going to take all your calls here. 248-539-9797. Again, it's the Hardcore Mortgage Show brought to you by Capital Mortgage Funding. What's happening out there in the mortgage world? Well, again, as we talked about having all this equity, great opportunity to do these refinance cash out opportunities to consolidate your debt and get rid of some of the toxic debt out there. But also the first step, Pete, is always the most important one, is to fix your mortgage up. Maybe get rid of that MIP, that mortgage insurance premium. And I think if you take a look at the conventional rates now, if you get rid of the MIP, although your rate might be burping up a little bit, going up slightly, maybe even a little bit more than 0.5%, it seems like it offsets because the mortgage insurance is not a tax deduction. So maybe 5% without PMI is a better mortgage for somebody than 4.5 or 4 3/8 with MIP or that PMI out there. And again, at the end of the day, you got to run the numbers.
I'm with you 100% on that.
Have you had a lot of clients giving you calls about taking a look at that, or where are you at with that?
Well, I have. It's mainly my past clients. I mean, like I said, I've been doing this since '92. I haven't moved around a lot. I just, my business, I've built up a following from previous clients and their kids and whatnot. So yeah, I do have a lot of previous clients that I'm looking into that for.
Yeah, that's the best part about it is I think we're growing old here because we're starting to do our people our age, our friends, their kids are now buying houses. They're in the 20s and stuff, and it's real nice when they refer them and we're able to get the job done for them. That's a lot of fun. So many great opportunities out there, Pete. And again, you're one of the experts on MSHDA program. You've done quite a few of them. I would say as many as most people here in Southeast Michigan, if not in the whole entire state. But of course, the MSHDA program is still out there with $15,000. That Step Forward program. So we'll talk a little bit about that if you want to entertain us about that a little bit.
Well, okay. Now, the Step Forward program, that the state of Michigan, the Michigan State Housing Development Authority, they have always had the down payment assistance program of $7,500 for first-time buyers. But back in October, they came into $20 million of federal money that has been earmarked for 61 particular zip codes where they're giving away $15,000 in down payment assistance. And this is a forgivable loan. This is, you stay in the house for 5 years, that $15,000 is yours. You never have to pay it back.
So I'm just going to say that one more time because it sounds too good to be true, and it's perfect. If you qualify for this program, again, so I think the minimum 640 credit score they're looking.
That's not tough.
So that's not tough to get. And again, if you're under that, we can help you get to that score.
Right.
The state of Michigan, there's about $10 million left on the table still. Will give you $15,000 on the Step Forward program. Certain zip codes apply, but again, you can't have more than $10,000 in assets.
Right.
It's for lower to middle income. It's to stimulate some housing here to get some families into homes.
Really quick, you need to be a first-time buyer, which means you cannot have owned a home in the last 36 months, okay? Low income. And the income limits vary from city to city and county to county, but basically if you make less than $70,000 a year, you're fine. If you make less than $83,000 a year as a family, you're fine. Okay.
And we see that was even higher in some of the some of the counties. You can make up to $100,000, I think. In Washtenaw
County. You get a family in Washtenaw County, you make like $130,000.
All right.
And you've got to be a low-income first-time buyer, 640 credit score, which is not a hurdle, not an insurmountable hurdle right there. You got to take a class, and you cannot have more than $10,000 worth of assets. And listen, on the $10,000 asset limitation right there, if you've got $15,000 and you make $150,000 a year, you don't need the state to kick in to help you, okay? This is designed to help people get a leg up. to get them their start, okay?
Right, and the 401k does not count as those
Right.
assets. It's $10,000 in basically liquid money,
Checking and
savings
yeah.
accounts. So, right, so if you're out there and you're at one of the plants or a hardworking person here in Southeast Michigan, again, give us a call at Capital Mortgage. Find out how you can get your hands on this money. These transactions, you literally could take the class next week and get a house and close 30, 45 days later.
But the money it's a limited amount of money. It's not this is a program. It's a pile of money that's half gone. Okay. And actually, Mark, you just closed one of these yesterday.
Yeah, yesterday we were at the closing. You were there, and our title company with our client Allie.
Yeah.
Beautiful house. She ended up getting 4.25%.
Right.
15,000 down. It was a beautiful thing. She got a beautiful house in Lincoln Park.
That's the thing. The Mr. program has Mr. rates, and the Mr. rates now are a little bit lower than where the conforming and FHA rates are now. So these great opportunities. We're going to talk about several opportunities out there all morning long. Keep it here on 97.1 The Ticket. We'll be right back.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
1270. Your homes for the NFL on Westwood One. The Pittsburgh Steelers host the Los Angeles Chargers. Sunday Night Football. Pregame at 7:30 on CBS Sports Radio 1270.
Hey, we're back. 9:15 if you just joined us. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. That's right, we got a full office all weekend long. Call us at 1-800-LOW-RATE, the best mortgage banker. You get a really strong, easy for me to say, really strong approval letter. What we do is we gather your documents, we run you through the AUS system so you're completely approved. Then we break down and we make sure that you have all your documentation and we ask you all those tough questions. Again, we hear often that there's closings that are blowing up at the last minute. You want to avoid all your headaches and enjoy the experience. Okay, call Capital Mortgage Funding, 1-800-LOW-RATE. Easy as that. Again, we take your calls here all morning long, 248-539-9797. Love to hear from you. Let's go out to Elizabeth. Got calling in from Allen Park. Elizabeth, good morning. Welcome to our show. What's your question?
Good morning. Thank you. I have a question for Mark and Patty Henderson. I just want to know, what was, your reason for getting into the real estate business? And how does, that reason or passion, help potential clients for buying or selling a property and, all that stuff?
I like that word passion, that's for sure. Hey, guys, that's a pretty good one.
I'll take that one.
Get into the mic a little bit. Yeah, there you go.
My background is I was a paralegal for almost 20 years, working in bankruptcy.
Yeah.
So watching people lose their houses, that was very sad. And I didn't like doing all that. So I started thinking, I'd like to help people find a new home and see their dream actually happen. I looked it up, tried to find out where I could go into school and work toward getting my real estate license. And I did that and just kept going.
Then you dragged Mark off. Mark was in some other field or something, but in sales and stuff. And he said, wait a minute here. I like homes. And, you see a lot of people get in our industry, although we've had a plethora of maybe too many people over the last 7 years because it looked like an easy ticket to make some easy money. On the other hand, so many families, so many of them out there, we're only doing 1 or 2 transactions, really getting in the way of a lot of good business and stuff. And there's not a lot of professionalism. When you're just starting off, you really got to learn. Mark, where's the learning curve? What do you think it takes to really learn the business real well?
Well, with my background, I've had 30 years experience in sales, so I've been into negotiating and taking care of clients and stuff like that. And one of the biggest things that we looked at getting in there is making sure we got all our education in. We did some mentoring with a couple other brokers and agents, and the biggest thing that we look at is making sure our clients are taken care of. We take care of our clients first and foremost. Everything else will happen and come secondary, but our clients is the most important thing that we take care of.
Yeah, it's really fun and exciting, especially when a transaction. There's so many things going on in a transaction. I guess I don't know how people think they hit a button and they're going to get a mortgage. They don't, because they call me up a year later and they say, Harvey, I went somewhere else, and they don't even know what 2 + 2 is on a mortgage. So I do think there's a certain amount of knowledge that comes with it. And I think the best way to learn about buying a house is to buy one. I mean, I always thought always felt like
buy 2 or 3. Hey,
I was like second year in the industry when I bought my first house, and yeah, sure, I was learning, but boy, nothing like really going through the process, because there's so many moving parts. We say from the offer being accepted, first you got to be approved,
right,
and have your ducks in a row, and now you're out there of navigating and looking for a house, Pete. You've got a lot of things to get together.
There's one thing also that you don't understand until you buy a house yourself, and I think we should buy a house, every 2 or 3 years, just to remind us of what it feels like to be a buyer, and the stress and the apprehension and the worry and all of that happens even to us as professionals. Last time you bought a house, did you feel it?
Those were easier, but I agree with you. I think that the first one was the most stressful because, but once you've done it a few times, you seem like you can get organized, and there's a process and a procedure. And if you follow all those steps, you're going to really have a good experience. I'll tell you, there are so many things to talk about when you're purchasing a house. I have no idea. No, we have the ease of doing the online mortgage. Okay, you don't have to talk to me. You can literally go to my site, click it in, send me your documents. And if everything lines up and all your ducks are in a row, you've got the funds to close. Now, you still got to liquidate money times.
Right.
You still got to learn about what the next step is, when you do the inspection, when's the appraisal, or who handles the appraisal. So I get these questions all the time. So with all these things going on, there's definitely some knowledge. There's knowledge. You have to build that knowledge bank. We talk about it often.
I agree. I'm drawing a blank right now. But I mean, there's so much. Yeah, there's so much that we do that we don't even think of at this point right now.
Yeah, don't be messy and unprepared. I had we always have the do's and don'ts out there. Every now and then I'll write down the do's and don'ts. You know, obviously, if you're out there thinking about purchasing a house, try to keep your expenses down. I mean, here we got the holiday seasons coming up, guys. I mean, everyone, and we know that the way the economy and the numbers are that, you know, especially Americans, we like to overspend. So trillions of debt we're going to have. And again, now we have the trillions of equity, and hopefully families will do the right thing. But more importantly, if you're thinking about buying a house, try to keep your debt to income ratio down. And that's what people need to understand, is really understand how those debts can affect them, including there's no payments for a year. Those count against you. So a couple of reminders this time of year, if you get people get locked into these 2 years or 3 years, no payments, and they're buying furniture or whatever it might be that they're buying. There is a monthly payment that is attached with that when you're buying a house. So find out before you make those large purchases. Again, if you're thinking about home ownership, definitely get some more professional people. Also, your funds, the money to close. Talk to a real mortgage professional. Call Capital Mortgage Funding. Again, there's no obligation to deal with us, Pete, but so often families need to call us now so that when they're going to buy a house in March or April, we don't find out that all their money's cash and it's under the bed, and they got a out of a country relative giving them money, all sorts of things that we can't track the funds.
No big deal if we know about it now. But if I find about it in March or April, big deal.
Yeah,
big deal.
Funds to close are always a big issue, especially with families that don't have their money all set up. Again, if you have your money saved, if it's in a 401k, we can show that. That's easily documented. But if you're dealing with cash money, if you're self-employed, if you've got gifts from people that are using cash money and they don't have the money in the bank, yeah, you got to do the right thing with it. So we got tons of information and helpful tips we can help you with. Again, call Capital Mortgage Funding. Pete, want to throw out all the programs out there. Our jumbo loans are absolutely unbelievable. We have the best jumbo rates in the country. Just call us. Conventional, FHA, VA, 0 down, USDA. I'm doing a USDA transaction now, 0 down. Of course, seller's concessions are allowed. This client didn't have had too much income, or they weren't going to qualify for the MSHA program. That wasn't going to work for them. But the USDA program was absolutely a great program. Again, we talk about it often, just on the outskirts of the major cities around here, but northern Macomb County, all of Washtenaw, Livingston, Lenawee, Monroe County, parts of Wayne and Oakland County. These are all in USDA areas, meaning that you could do a rural development loan 0 down.
So, yeah, and it's very important to get this all sorted out before you find the house, because a lot of these programs, it's like threading a needle. You can't make too much money. You can't make too little money. You've got this program might work here, but across the street in the different county, no, that's a different. You think it's the same house on the east side of the street or the west side of the street. And I actually ran into this week, where we have a MSHA $15,000 down payment assistance program in a zip code that should be, but this zip code carries over to the other county, to Monroe County, so it doesn't actually apply. But you know, these are the things, these are the intricacies on especially these programs where, you know, that you can't just on a phone conversation or on a text or an email say, what kind of loan can I get? A lot of times you just got to come in. We got to do this old fashioned. We got to break out all the paperwork and do the math in a legal pad and figure out exactly what is going on, because you don't want to get caught, you know, a week before closing.
You know, a portion of the clients out there are so easy to deal with. And again, who are you in this? I have a whole family worth of cousins that are W-2 doctors. So these guys got money. So they got their savings money. They got
Send them my way.
Right.
Okay.
Those are
I'll do those loans.
Yeah, they thank me. They don't understand that they're the easier loans to actually get done. But the harder ones are the majority of the people. They've got some moving parts. They might have child support or alimony or additional income or part-time job.
You got so many 1099 employees right now. You know, the whole industries are trying to push everybody off W-2s into being, you know, contractors. That's a whole nother, you know, assortment of problems or issues to deal with.
Right, when you're going to sit down with your CPA, how much income are you going to show? Again, but so many great programs out there, but call the professionals, whoever you're comfortable with. Again, if your real estate agents are referring you to people, that's a good start also. A lot of our top agents, we like when we get the referrals from them, but we know that there's a lot of competition out there. And probably meeting one or two loan officers, finding out what the differences are, sitting down with them and finding out their expertise, how long they've been in the industry, that's probably the first step and the place you want to start at.
I think above and beyond that, you know, also when you're buying a house, you know, it's very important. You know, you've got to know what's going on, but you've got to have, you know, there's no one stop. You know, there's no one guy that knows it all. You've got to have a team. Yeah, and I think the Hendersons over here, they embody that as far as I'm concerned.
Patty's in the office,
Yep.
Mark's out on the road, hitting the houses, that type of thing.
You've got somebody who's strong with the paperwork, and then you've got somebody who's strong with the interpersonal relationships, and then you've got to have access to contractors and insurance guys that you trust, that are honest, that you can turn them over. Hey, go see this guy for your insurance. Whatever he says, I trust him.
Right, a team of professionals,
Yeah,
including, as you mentioned, Mark, last night, the inspection, how it's great to have a great inspection guy on call at any time that can get
absolutely.
out there and make sure things are all up and up on the houses. All right, that music says we're up against a quick break here. When we come back, we're going to get into renovation loans, the FHA 203K. Hey, if you don't want to move your house, we'll show you how to fix it up. We'll be right back.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
downriver area. I know that's your specialty down there, guys. So I always name off my downriver cities. You got Woodhaven, Riverview. I just like to keep up with them. Grosse Ile, Brownstown, Taylor,
Wyandotte,
Wayne, Allen Park.
Lincoln Park.
Is Allen Park considered like the northest, or is Dearborn considered maybe the north part of that, sort of area?
Actually, I think the Allen Park is probably considered the most north, and then Dearborn is actually another entity.
Okay, there you go. There you go.
Downriver has been, it has been hopping. Wyandottes been hot. Allen Park is hot right now. Some of the other cities have cooled down a little bit, but we're still out there. We're running.
Yeah, a lot of fun for you guys. I mean, again, we know this is a slower time of the year because it's a holiday season, and people sometimes, I'll call me after the holidays. Hey, Mark and Patty, I know you'll sell me a house, but now's the time. I mean, Mark, you sort of came out and started the show with it and said, you know what, now's just an opportunity with low interest rates still. Pete's already told us that, of course, the interest rates, although they burped up a bit, nothing like 9.5 when we got in the business and back in 92. So with the great opportunities out there, just that less competition makes it easier. You don't have to feel that pressure. Boy, that pressure is going to be back out in April, isn't it?
It's going to hit hard, and what they're talking about is this coming year is going to be even bigger than this past year.
Really?
Yes.
Okay, so there's more and more buyers out there. Even though the rates have trickled up a little bit, the advantages to home ownership always are better than renting a home. So great opportunities out there. Again, we want to take your calls, 248-539-9797. We always got so much to cover here. We're going to have sports at 10 o'clock. Pete, you and I were just talking about, we talked yesterday, all these great renovation loans, whether it be an FHA 203K loan or a conventional loan. And then we talked about how you got to have a great team in order to make these loans happen. Can you give the audience a little bit of information about how that process starts? Yeah.
Absolutely. And I'm going to say this, when done properly, the 203K or the home style renovation loan is a fantastic product, okay? But it is paperwork intensive, and you have to know, it's like you have to know before you take the first step what your next 10 steps are going to be. You can't get into the middle of it and then just try and figure it out, okay? It's very important to have a team. You need to have a contractor with you. I mean, I would say you have to pick your contractor well before you pick your house if you're going to go down that route, okay? Because the contractor needs to know what he's talking about.
One of our cost consultants has his own group of contractors because he's realized that the ease in making these programs really work well is having the contractors that know they're going to get 50% of the money when they start, but they're not going to get paid on the project till the project's all done. Right. So it's so important to have guys that have, obviously the contractors have to be licensed, insured, but they also have to have some money and some financial means behind them to get the work done.
Another thing to keep in mind is, when you're looking for houses, you're a buyer. You don't know really what things cost. You're thinking, well, you know what? I think I can fix up that kitchen and bath for $5,000 or $6,000. I'm pretty handy. And then that's not the way it's going to work. You need the contractor to come in there and to give you a real, his opinion on what it's really going to cost to do these things, and also the 203K consultant who's going to give you his opinion on what FHA or HUD is going to require.
Oh, yeah, that's right.
Things that you think you can overlook. So you may think it's going to take $5,000 or $10,000, and maybe it's going to take $20,000. At least you know that coming, ahead of time. You know that before you get into it. I just want to give you an example here, though, of what I would call a home run 203K, and it's one I did this spring.
Okay, good. It's a good story.
Over here in Southfield, this was a HUD repo.
Okay.
This house had been sitting on the market for over a year.
Okay.
My buyer, she bought it for $86,000.
Yeah.
She had a little over $25,000 in repairs. Contractor repairs.
What's that take me up to?
That takes her up to $111,000 invested into this property. And when we do these 203Ks, the appraiser will go out there and they'll give us an appraisal subject to repairs. They're going to tell us what this house is going to be like once the contractor's done. And his subject to repairs appraisal was $170,000.
Wow! So
that's a home run. That's $50,000 worth of equity.
Not only that, so someone buys a house, they get in for 3.5% down. We give them all the money to fix up the house. There's a few extra fees in regards to inspections and stuff, but she's sitting on, an unbelievable loan to value position. Almost what is that? 62%, 65%.
But if you, this is somebody who did it right. You could just as easily overpay for a house, overpay for the repair, underestimate the cost of the repairs, and end up in the hole if you don't know what you're doing. That's why you need to have your contractor. You need to have your 203K consultant with you from day one.
Right, we got it on the FHA. Right now, the FHA loan limit, $294,515, but that's going to go up as the conforming limit went up this past week. We are going to see the change in the FHA. I think the FHA and USDA, they'll be definitely announcing those soon. I can't say anything this morning, but the information will come out very shortly or within the next 30 days, and we'll be able to give you that information. So you can buy a house that's sitting there, and it's a rat. It's a $200,000 rat because, like you said, Pete, it might have been a foreclosure. Maybe the people living there have been gone for a long time. It's been on the market for several months. Now they can go ahead, bring a contractor in there. Maybe the neighborhood's selling for $260,000, but the house needs that $30,000, $40,000, or $50,000 worth of work. But not only do you get the value, but you make the house the way you want it.
Exactly, you make it the way you want it.
That's really fun because you're out there looking at all these different homes, and now you can put a brand new kitchen, a brand new bathroom in.
But you have to go in with eyes wide open. You need somebody else's set of eyes, not the rose-colored glasses. You need somebody else's a professional set of eyes to say, you know what, maybe this isn't worth it, or you know what, yeah, this is easily a home run. Let's go for that.
All right, definitely check out Capital Mortgage's Facebook page. We're broadcasting this one here, Facebook Live, but we also feature homes on there on the Hardcore Mortgage Show page on Facebook and also on the Capital Mortgage page on Facebook. We've got a lot of, I call them sort of pocket listings. A lot of our agents and agents across Southeast Michigan will send us their listings, and we'll get them up there on the site. Sometimes we get a diamond in the rough out there. That's just what you're looking for. Again, check out our different sites out there, and there might be a house that'll fit your needs. But as Mark Henderson's telling us, Mark, this 2019 is something to strap in for, but who's going to be out there selling the homes? As we know that right now things appear to be a little bit slower in some of the communities. And as you're building your team up, moving forward to this springtime, what are you thinking? Is it going to be? Is it just going to start here maybe in February, or should families right now, if you are thinking about buying a house, if your lease is up in February, you need to be out in the marketplace right now?
They should have already been out already, looking and talking to a mortgage person right now to get ready for that situation. But if you're actually looking at March, April, right now is the time to actually start talking and getting our conversations going. Once we figure out the personality and which mortgage person to give it to. Make sure they get the right decision, and then start working forward. So when the new year hits, then we can start giving them new listings and getting them out there and start realizing that this is going to be a real thing, and then go forward.
Regarding wants and needs lists, you meet families, you sit down, and do they seem like they change quite often when you finally get out there in the marketplace and see what's available? Do those wants and needs change, or do they just get sort of moved around a little bit? Or have you ever seen a dramatic change where someone says, you know what, you're right, I don't need to be in that city. I can be anywhere, and this is what I'm looking for.
Yeah, we've actually got a client right now that's done that to us already. He's gone from one direction to completely the opposite direction.
So sometimes what you're thinking might not be true, and once you get more information and get out there. So, we used to have some agents, and they'd say, hey, you know what, Harvey, I'll show someone a house right away. The first one I'll show you, you don't need to be pre-approved. I'll get you out there in the marketplace, and then we'll see what's going on, and then we get you into the financing. Or you're like, nah,
no,
that's not even a step in the right direction.
Most clients I won't start working with until I know they got a pre-approval in hand, because if they do find that house they got to have, if they're not ready, they're going to lose it.
Yeah, they'll lose it, and that's always disappointing. And then they get mad at you, and that's a big eye-opener for a lot of families out there. How about downsizing? We hear so much of that. Again, if you want to call the show, 248-539-9797. We brought in Pat and Mark Henderson from eXp Realty, which is they're really specialized in the Downriver area, but all over the Tri-County area. But definitely want to hear from you. 248-539-9797. What do you think about downsizing? That's a thing of a lot of the empty nesters. The kids are finally out of the house or out of college. The kids have their own lives. It's not as easy because as we're looking for smaller homes, now we're uncapped and our taxes are higher, association fees are higher. Have you had some good successes with that, or are they building some opportunities for like the empty nesters to downsize?
There is some opportunities that are definitely out there. You got to look for them because right now they're hard to find. But I can definitely tell you that the HOA fees and some of those are. They're coming up because they're doing the maintenance and taking care of the buildings and the roofs and stuff, and they're starting to hit higher. So we're really watching carefully with our clients to make sure that I don't want to overprice them at all. I want to make sure that they're in their means.
Yeah, so often we get some calls and families are telling us, hey, we want to downsize, and then they look at these association fees and such, and yeah, they can be a little startling, especially
very
here.
Daunting, yeah.
Yeah, because here in Michigan, one of the things that I know, I lived in a subdivision that had site condominiums, even the roads, and this was where you just pay an annual fee to live in a subdivision, whether it be $400 or $500 annual fee where they take care of the common grounds. but our roads get torn up here in Michigan. Again, I don't want to talk about any snow coming our way soon, but it will be here. We've had it already the last couple weeks. But yeah, our roads get eaten alive. And then what happens is they have to do an assessment. And these assessments can be pretty expensive. Again, our roofs get eaten alive here. Michigan has some additional maintenance that it is always required on a house. If you come across things that, hey, you know what that music says, we'll talk about it. So let's talk about some maintenance and the cost of home ownership right when we come back. 248-539-9797.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Anywhere. 97.1 The Ticket.
All right, welcome back to the show, 9:45 if you're just waking up. Hey, it's going to go up to 42 degrees today. Bring your umbrella, though. The rain's coming about at noon. And then maybe it's going to rain all night. But hey, we'll take the 42 and we'll take close to 50 degrees tomorrow. Thaw things out here. Enjoy your weekend here in Southeast Michigan. Get down to Detroit. Spend some money at all those restaurants. There's only a couple million of them out there. Pete, what do you got going on for tonight?
Well, you know what? I had big plans for a Big Ten championship game.
Oh,
I guess I'm still going to watch that. But
all right, we'll talk. We got sports following us at 10 o'clock. Welcome to the Hardcore Mortgage Show again. If we're taking all your calls here, 248-539-9797. Let's roll off to a call here. We got Rick calling in from Sterling Heights. Good morning, Rick. You're live on the ticket.
Hey, good morning, gentlemen.
Hey, how you doing?
I had a question regarding investment properties and what you thought the opportunity for investment properties going into the next year or two might be, and if any of these programs you've been discussing would apply to investment properties.
Well, no, they don't. None of the MSHDA programs don't at all. Investment properties on the mortgage side of things, and I'm going to let, of course, Mark answer on the real estate side, but on the mortgage side of things, Pete, as we know, it's 20% down. Mm-hmm. You can buy any house you're looking at. You're buying it as an investment or as a rental. Most of the families are buying and holding now. The flip opportunities aren't there like they have been in years past because the market is sort of caught up to itself. So I do like the idea, Rick. Yeah, I think it's a tremendous opportunity. It's a good way to change your portfolio up and, diversify your portfolio. As you've seen, the stock market gave back all of my profits this year. It seems like we've given it all back. Is that what you're thinking, Rick? Some maybe diversification?
Yeah, absolutely. And, I've talked to some folks that hold investment properties, and they've talked about the opportunities washing up because prices have gone up substantially, but I just wondered if you can still pick and choose in different areas and find some good deals.
I could probably jump in on that one. As long as you got a good real estate agent, they can actually get in there and actually start searching through. My wife and I actually have a couple of investors that we're working with right now. And Harvey's right. I mean, they're not out there to pick and choose just about anything you want. You actually have to look for them. And we've got a couple clients that we're looking deep, dark dives, trying to find something for them to get into that's going to be valuable to them, and it's going to be worth the jump, and either turn it into a rental or a possible flip.
So if I wanted to reach out to someone like yourself, where would I go?
You can actually definitely give us a holler. Give us a call at 313-268-6478. Or
we'll do this for the numbers. And Rick, in case you're in the car, we follow up after the show. I'll give you the Henderson's information right after the show and maybe go over some of the areas that you're looking at. And if it matches with where, they have some expertise, they'll definitely hook you up. But I think all areas are in play. And I think, Mark, you'll agree with me. Rick, I love the college towns, too. Any of the families that have bought anywhere near the colleges, and I'm not just talking about the major universities. I've broken it down to, although of course Oakland University now is a major university, but some of the smaller schools, whether it be Adrian, Albion, even Concordia. I mean, these are opportunities all around Southeast Michigan where students and young people wouldn't mind renting.
As a matter of fact, I'm closing on a loan here in the coming week, actually out in Kalamazoo. She's going to Western. She's going to Western, so the parents are co-signing for a house for this kid to live in when she's there. And 4 years later, they're going to sell it.
Yeah, I mean, or maybe they'll keep it if they're doing really well with it. But that's one of the things that, again, families can do. And again, of course, the Hendersons know this is if your kids are in college and they have good credit, they can be on the mortgage, but they have no income.
Right.
But they can be on the mortgage. It's going to be their primary residence. You can co-sign for them.
Right.
And you not only can you co-sign for them, but they can buy at minimal down. Mm-hmm. And I'm talking on FHA, it's 3.5% down. And on conventional loans, even 5%. And you don't have the 3. Even on that 3%. I think on the new home.
You do. Yeah. There is the opportunity to go 3% down. There's again
and have co-signers.
Again, threading a needle, but you've got to know what you're doing before you pull the trigger. But yes.
Yeah, so many families have taken advantage of these great opportunities. Boy, oh boy, the market really tanked in 2007. We saw so many of the families diving in and smart people who were, they knew when things are bad is when you buy. It's pretty scary, though. It's a scary proposition, especially here in Southeast Michigan, because we were so involved with where the automotive industry was going to be headed and where people are going to be working. But we see everyone's back at work here. Hopefully, again, that a little bit of bad news earlier this week, but hopefully these families are going to be able to move to other plants where we're going to move in that direction of whatever, electric cars or whatever they're moving into. All right, 248-539-9797. We were talking about renovation loans today, some different programs out there. Also, the winter tax bill. Folks, if you are a homeowner, guess what? today's your lucky day. The winter tax bill should be coming out to most of you if it's in your mailbox. Again, don't be alarmed if you have an escrow account. Yes, your servicer will pay your taxes. You can always send a copy of your tax bill over to your servicer, or if your servicer just changed, you might want to give a call to your current mortgage servicer to explain that you just received your winter tax bill. And again, that tax bill's not due until maybe February 15th in most situations, but if you want to get it as a write-off, make sure you pay it before the end of the year, and that way you can use it, and your CPA will advise you on whether or not you want to use it a write-off for this year. So definitely take a look out for that. Again, we talk about debt consolidation, but so many families also sometimes run into this property tax issue. Pete, for families that don't have escrow accounts, we strongly urge you, if you're having trouble, if when these tax bill come, if you cringe every time the tax bill comes, give us a call, Capital Mortgage Funding. Let us get you fixed up with an escrow account.
I mean, I always tell all my buyers, is like, you can pay your own taxes if you want, but I'll tell you when they come out. They come out in December.
Yeah.
Christmas time. And then they come out in July when you're vacation time. Why do you want to deal with another $1 or $2 or $3 grand out of your pocket during Christmas or vacation time?
Yeah, it seems like it's easier paid for when it's budgeted throughout the month,
right,
when it's prorated throughout the month. So whether it be your taxes, your insurance, but again, look out if you haven't paid some of your property taxes, or if you're having that as becoming an issue for you, definitely give us a call. Capital Mortgage Funding will hook you up with some great information, and we'll show you how to maybe even get that escrow account set up. I think that's a great thing to do. I got some other things. Always in refinance, in regards to refinancing, reducing your term. Pete, let's throw that out there as we're running out of time here. If you have a 30-year mortgage, if you're finding yourself where you're in a situation you can send additional money, take a look at refinancing to drop that term. Shorten that term.
Shorten the term, like we talked about at the very beginning. Shorten the term, or, people have access to equity right now. People do have access to equity, not to take a round the world trip, or not to to buy a new fur. To do smart things with it. Do smart things with your equity. But those are the two things that people are doing right now: shortening up the term and possibly utilizing the equity they have in their house.
Hey, Mark and Patty Henderson, eXp Realty, Downriver. Promote yourselves a little bit. What do you guys got going on? Where you have, how's that eXp office work? I know we've had some of your agents on from the different eXps. Some of the big players are really headed that way.
Yes.
Tell us a little bit about that.
Right now with eXp, they don't support brick and mortar, so this gives you allow you to work anywhere you want as long as you got Wi-Fi, got your computer with you. Doesn't matter. I can sit down at Big B's or Tim Hortons and open up my computer and actually create a deal if I want to. It's just a lot more freedom. I don't have to go to the office and have to check in and get on the up list and everything else. You go and you work your own deals.
So in other words, your office is every coffee shop in town. I want to throw the names out there, but every coffee shop in town has become your virtual office.
Basically.
As long as if you have your computer and you can do authorization, signatures and stuff on the computer.
We can do everything.
That makes it easy.
Go through DocuSign and everything else. But again, with us, like Pete said, I mean, we actually have a team. I have, the title people, Title Connect that we use in Taylor, Mary Ross. We got Peter. We utilize him quite a bit with Capital Mortgage Funding. Got an inspector, Siberian Home Inspections, Dave Hino. He's phenomenal. Even got Morris Moving in case they need a mover, somebody to help them get out of their rental or whatever they're doing and get them into the new house. So, I mean, we have a team, and if you get into a loan that you need a contractor, we actually have contracts available to us. Plus, I also have an architect who's actually in the family that we can actually utilize if we need to, if that's the case.
All right. You got to have a team. You got to have a team of professionals. I mean, the knowledge is everything. We think the knowledge is key. Again, continuously out there. If you're thinking about buying a house, consider Capital Mortgage Funding. We'll help you build that knowledge bank for you. That's the key. Having knowledgeable people and professional real estate agents like you guys who have the team set up. You have a nice demeanor about you. Again, you're nice and easygoing. Not like me. Not like I got too much energy sometimes.
I tell everybody, the Henderson Realty team of eXp, we are moving Michigan. Let my team work for you, and I'm including everybody I mentioned as part of my team.
All right, we talked earlier about how the real estate market shifts all the time. Again, a buyer's market is when there's 7 months of inventory out there, a balanced market 5 to 7 months of inventory, and a seller's market when there's less than 5 months of inventory. We're somewhere in between all of that, depending upon what area you're looking in. That music says we have to go. Want to thank you guys for coming in. You're awesome. Always Nice,
for having
easy
us.
couple to deal with. Mark and Patty Henderson from eXp Realty from Downriver. And guys, thanks for joining us. Get you back on the air, and we thank you for sending some business our way. And Peter, always a pleasure.
Yes, sir.
Pete, you're an easygoing guy, man. We're almost twins, right, Pete?
Almost
twins. We got a lot of things in common here. All right, it's been a pleasure having you guys this morning. Keep it here. We got Pat Caputo coming up with sports. Keep it here on 97.1 The Ticket all day long. We'll see you next Saturday.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Hi, Harry Glantz and Dan Burke for Capital